Let's turn now to today's strategy session. The market rotation is in full swing with the small cap heavy Russell 2000 hitting its highest level in 3 years as investors shift away from mega cap tech here. Joining us to break it all down is Michelle Snyder, marketgauge.com chief strategist, and perhaps not an outright shift away. Great to see you, by the way, Michelle. Not an outright shift away from mega cap tech, but it certainly is a broadening out that we are seeing into some of those small caps. So on the technical level, can you break that down for us? What type of profit taking we might be seeing in tech that's leading into some of those inflows in small caps?
Well, a lot of it is going to be based, of course, on the interest rates. And so I think a lot of the market that's broadening, particularly if you're looking at small caps, it is very much hopeful that the rates at least have peaked and will actually go down. The 50% of the 50 basis points rate cut that we had recently, yields have gone up since then. So while we're at all-time highs or close to it, not quite there yet, we have to really be wary here of what happens with the rates going forward. The street is very heavily short in terms of the rates, and they're anticipating higher for longer, which could mean that this could be sort of a false breakout, but we don't know. This is the nature of October. It's very volatile. However, I don't want to sound pessimistic because on the optimistic side, so many things are tied together. So you're mentioning the Russells, but clearly regional banks are tied to that. We have healthcare, which is weaker today. So that's one of the reasons why IWM is slightly red at the open. But financials are a big part of that in terms of the small caps. And then, of course, you have to look out at the retail sector, which we had great sales today, retail sales. And that, too, is flirting with all-time highs. So we may need a little bit more patience, Brad, here to really see if this is a sustainable broadening. Certainly, it is a bullish season. After 2 years of a bull market, by the third year, generally it goes up. So we're optimistic, but we are not flying into everything yet.
Michelle, what will give you that confidence?
You know, I think, Shauna, the big thing for me and our clients right now that I have my eyes on is really going to be the consumer. Everything is really ultimately up to that. Yes, of course, we saw great bank earnings, and now with regional banks today, MT&T being a strong mover. But it's going to be what happens here as we get into closer holiday shopping, whether or not people are going to feel better about inflation, even though the numbers are suggesting they're down. Inflation is still being felt in a lot of different places. So if we see XRT, I love to use that one, which has been in a 10-month consolidation, which is mind-blowing, actually, if you're a technical trader. If we can get through this 79.80 level and sustain it, I think that I would have to say, put your blinders on to any bad news and just jump in.
And so with that in mind, where are the kind of dip buying opportunities that are most ripe for the taking?
Well, if we're going to stick to the retail space, Brad, I have been very keen all year on what's trending for 2025 and already starting, which of course is the vanity trade, which is basically the trickle effect of the diet drugs and the new consumer, if you will, that will enter the market in a way that they haven't been before because they feel better about themselves. So names like Ulta are still very cheap. Elf had a huge crash. That still looks very cheap. Some of even the drug companies related to that, like Novo Nordisk, these things also look cheap. In terms of the tech, I mean, we cannot deny that that's a growing field. Obviously, TSM blew the street away today. So I'm watching some of the ones that may not necessarily be catching up as well as they should, like ASML, if it can get back over 700 this week, could be interesting. Otherwise, the ones that are very rich are volatile. So that's one big area that I'm looking at in terms of the retail space and also in the tech space.
Michelle, you briefly mentioned ASML, and I want to specifically talk about Nvidia because that was caught up in the selling pressure that we saw earlier this week. What are some of those key technical levels that you're watching, and is there a reason to be maybe a bit concerned that we could see a broader pullback and then obviously the ramifications?
Well, yes. I mean, what we're seeing so far in the last couple of months is incredible volatility in that space. And generally that happens before some kind of a sea change. Now, when I say sea change, I don't necessarily mean that I would be negative, but it could mean that we might see Nvidia fluctuate between, let's say, 115 and 150. Right now it's trading close to the all-time highs, which I think is 140.79. So that's a good sign, but I wouldn't necessarily be piling in here. Actually, you just showed it up, so it's come off a little bit since the highs of the morning, 138. To me, that means that if you're in it and you're a long-term passive investor, fantastic. You're going to sit out any type of gyration. But if you're a newer investor or somebody who, like Druckenmiller, got out and is looking to return into Nvidia, then I think it would behoove you to be patient. And also, like I said, really, I think the opportunity might be if this broadening in the market is sustainable.
So should people be fearing the double top at this juncture in Nvidia?
Well, it's hard to say it's a double top yet. I mean, right now we've just slipped off a little bit. But what I think it does suggest is that there are sellers up there, people taking profits. And that means to me that you might want to buy a new high in that, but you have to wonder what your risk is. So if it is a double top, I think the good news is if you're patient and you wait it out and you can get an opportunity to buy it another $20, $30 cheaper, then that would be amazing. And that's the long-term growth of Nvidia, of course.
All right, Michelle Schneider, always great to have you at marketgauge.com. Thanks so much for taking the time to join us here this morning.